Wonderfully delicious to look at, Miss Ashley Miller. Hello, Miss Ashley.
Hello, I appreciate you guys. Sorry I missed last week.
Yeah, we're everybody was wondering what happened, but I calmed them down. I said, you know what, Ashley's just got one of those things, and we gotta wait. Just gotta be patient. The housing market has to wait for Miss Miller.
Oh, the housing market is not waiting for anybody.
No, that's true. So if you like what you see here today, please go ahead and leave comments and questions. Give us a little the loves with those heart emojis. If you're on YouTube, hit the subscribe button and catch up with us as we post these videos and as we go live. Ashley's excited. She's doing lots of thumbs. So what's going on, Miss Miller? We got a lot of things. We were talking in studio just before we went on about what's happening. What's happening with you?
Oh gosh, so as we were discussing, the biggest thing that I've been dealing with, being in the title industry, I see many different aspects of the real estate world. And one of the things I asked often by many different consumers, whether it's a consumer, an investor, real estate agent, is to buy, sell, or
Hodl.
Hodl.
Hold
on for dear life. I just learned
right.
what hodl meant. It's not a spelling error.
That is not a spelling error, no.
Hodl is hold on for dear life.
Hodl.
I've always been taught from the time I was young that real estate was your number one investment. Being raised by, folks that had been through the Great Depression. Buying real estate was their retirement, and currently, what is the stat? 83% of people's retirement comes from the investment in their properties. So how do you make that decision to buy, sell, or hodl?
Hodl. So hold on until you basically retire, right? Well, there's different ways to leverage off that. We were talking about that. And then one interesting way you brought forward that, I tended to forget about is pulling out your equity a little bit early.
Yeah, so I was thinking about this, as you guys have heard on many past shows about me recently purchasing a property. And I thought, oh gosh, okay, so recently I found out that Open Door, which is an iBuyer, and we haven't really talked much about iBuyers, but I'm sure a lot of consumers out there have been getting offers on their property from Open Door for cash, and they offered me $462. And I started doing the math. I'm like, 1 + 1 always equals 2. 370,
typically,
462. But
1 + 1 equals 2.
Here's the caveat. Great. Now I'm going to have, let's call it, after all said and done, let's just call it $60,000 in my pocket. Where am I going to go?
Yeah, I mean, you sell your house. What options do you have? There's really not a whole lot out there.
It's not.
Because if you sell your house, you're just going back into the feeding frenzy that is our current market, and it's difficult to make a purchase. I'll be upfront and frank. I lost a transaction because, we were going out there and looking for a house to purchase. They needed to sell, and getting an offer accepted on a contingency is a bit of a challenge. Not too many people will do that. They want to see that your home is well into contract, that you're only 1 to 2 weeks away from closing in order to accept your offer, which is crazy. I mean, imagine not having a place to go to a week before you close, not really having an idea.
Right.
Or without support, like with a lease back or something like that. I mean, and that's a scary position to be in.
Yeah, seller carrybacks are big right now.
Yeah.
But with the buy sell holdy,
Hodl.
hodl, sorry,
It's hodl.
hodl.
It's not hold.
We,
Oh boy.
I'm gonna. Gosh, there's so many things I want to say about this because, I invest in stocks. Like, I'm still kicking myself in the A asterisk for not investing in GameStop.
Why?
GameStop was
Why?
up.
Oh, yeah,
Because
yeah.
my
You're one of
oldest
those?
son, who's almost 16 next month, he was like, Mom, I'm learning in his marketing class. He's like, he was telling me all about this, and I didn't invest. And then look at all these people who did, and they made all this money. Well, not all of us as average consumers. We're average. Most of us, no offense, we're just average people. I love stocks. I've got Coinbase. I've got Robinhood. I have Fidelity. Like, I have all these. So what I am learning right now is no matter how much money I invest in stocks, I will never make a greater investment. It has not changed.
Yeah.
It hasn't changed from, my grandparents that were, buying homes in the 60s and 70s. And there was a small span, during that roller coaster that things mirror and they give you a loan.
Yep.
I'm thankful right now that lending is very strict and they are going to make sure that the people who are purchasing properties right now are actually validated. Like the documentation is way stringent at this point. So we have 21 to 30% increase in the past 18 months in our equity in our property. There's no investment right now, again, unless you invested in some penny stocks that skyrocketed or, GameStop.
So
We are in such an amazing market right now. So if you own a home and you have equity in it, how do you make that decision? And I'm going to be a little bit of a what's the word I'm looking for when I want to tout you because I think you're an amazing real estate agent, but I also want to let people know that there is a time and a place.
Yeah.
And if they don't need to move, they can sit tight.
Yeah.
But if they are in a position where they are just mom and dad, who their kids are already gone off to college and they're saving those rooms, maybe because their kids might come back, or maybe because they're just praying and hoping that their kids are going to have grandchildren and they can turn into cute little playroom, whatever, sell your house. They're not coming back. And if they are, then you can put them in a hotel because you're going to make so much money off your property. You're going to be able to afford it.
Well, this isn't financial advice.
No, it's not. But
We're not financial planners or anything.
You have to make that decision, buy, sell, or
Hodl.
Hodl.
Got a hodl.
I don't know. When I got presented that offer, I was like,
it's kind of hard.
I'm staying.
It's kind of hard to unfortunately, I think this market is a lot like Vegas. It's a big casino, and you start seeing all these gains. I mean, you're basically at the slot machine, and you see this $100,000 mark on the slot, and you're like, do I cash in now or do I keep going? Do I keep going? And I've been there before, and I bet we're not financial planners or giving financial advice. However, if you do cash in, you could make more money. So yeah, I mean that's the thing. It's really the emotion behind this whole thing is really what's steering that, because it's not realized until you actually cash out.
There is a huge emotional tie, and that's kind of where I was going with this about the house that I have right now, where I bought it and I remodeled it, and I'm staying in it. So where's the value? It's an emotional value for me. Emotional value outweighs the financial value at this point. Where, going back to what I said about family, people who are in the elder generation where their children, not calling you guys elders, but your children are in college or they're having
retirees,
kids,
maybe
maybe not even retired, but again, 83% of your retirement comes from your home equity. Could you, like my neighbor, I looked up some information because yes, you guys, in title, I have access to way more information than you guys know I do. I will fully admit that. not only do I have like county assessor has access, like we all have access to public data. I don't know if people know this. Public data for mortgages, right? Your mortgage in your house. Anybody, whether we're in real estate or not, we can look up your name, your phone number, your email, what you owe on your property, your firstborn. Like, it's like Big Brother.
Can I get your phone number, Ashley? And your name. And your social. Where do you live?
You can
Just
have,
kidding.
you can.
Just kidding. That was a joke. Oh boy.
There, you can pull up people's a lot of data, and again, I'm going to go back and say this is not because I'm entitled. This is because this is public information. So you got me so distracted.
Hold on. Let me get you distracted some more. Hello, Ashley. We're talking about housing, sort of.
I had just gone online and I just researched my neighbor, and I found out they only owed $72,000 in their property, and they own 7 properties.
Are you trolling
your
neighbor?
In their 65. I was totally trolling because I wanted to know. It was a cute little house. And
But we're all like that. We all want to know.
You want to know? Well, I want to know because I want to buy another
boy.
property in my neighborhood that I could rent out. What's better than owning my property and then owning a rental that I can walk over to? I mean, that's just the best thing ever.
Other than seeing what they're doing in your house.
Well, yeah. So you can
boy.
pull all this information. So if they're in a position to where they own multiple properties and they have an immense amount of equity in it, this could probably be a great time to sell your property and give an opportunity to a brand new family to experience. This is where I'm going emotionally, right, guys? Give an opportunity to a brand new family to experience what you got to experience when you raise your family there.
So where are they going to go?
They don't need to because they have so many rentals.
Oh, well, it's a tough market to purchase several houses right now, or at least a couple.
But is it? Because think about all the 30, 60, 90 day
How much
leads.
cash do you
People
have?
are going to 40. Well, I might have more if I sell my property open door. I might have $60,000 sitting in my plate. I don't know. So I was talking about considering what are your overall goals. That's gonna be a question. So right now, I'm gonna be the question.
Oh, she's taking a poll. So if you have any comments or questions, go ahead and put those in the comment section below. We're kind of monitoring things. We're kind of going live. This is, we do the show every week, and we're gathering information. Ashley likes making faces at the camera when she thinks she's not on camera. But if you have any comments or questions about the Phoenix housing market or what we're doing, about Ashley, whether or not she's, you want her phone number or her name, go ahead and put that in the comment section below, and we'll take that information and hand it over. We'll check out your profile because we like to troll people, obviously in our neighborhood, and about different information. So, anyway, just kidding. But if you do have any comments or questions, go ahead and put those in the comment section.
So
yes,
I
Miss
think
Ashley.
that people should, keep a checklist. Like, what are your overall goals? You may be just purchasing a new home. You may be renting and trying to figure that out. You may own a home and realize you have a lot of equity. And you're in a situation where that money could change a lot of things in your life. Like, if you're a family, a husband and wife or boyfriend, girlfriend, I don't know, family dynamics are so interesting these days. But you want to send your child off to college, and they're going to leave, and you have a nice big house, but you can sell your house to gain $50,000 equity and downsize to a smaller house and use that college fund instead of getting loans and not have to pay capital gains. And I mean, you're still going to get a tax write-off. So there's lots of different ways to look at things. So really pulling out, you guys, like legit, a pen and paper.
Can they read? Could you read all that? I mean, that was very quick. She's got a lot of notes for some reason.
clean or clear
Hey, Mario.
strategic plans, considering your overall goals. What are your opportunities? How to predict the terms to tax deduction on your real estate and your cash flow. Those are my questions. I said them fast, but I can type them in later.
If you want to type those in the comment section, if you want to type in your own question in the comment section.
No, definitely. So he said sending your children to college in a recession is a bad move.
Yeah.
So, gosh, we could go in a whole nother tangent about this. Well,
you got kids too, and they're almost college bound, college ready.
My oldest is like 3 years out, and we've been talking about college a lot. And he said, "Mom, college is a waste of money. I can learn more online and on YouTube than I can anywhere." The fact that they make you have to
there's a part of that.
Present a degree that he could pay somebody for because he's probably smarter than the person who actually got the degree and wasted all their money on it. And I thought to myself, holy shit. Nikes, I'm raising a genius.
Well, I mean, there is
Besides
some
the forgery part.
there is some validity to that. I mean, when I got into real estate, I made more last month than I did the starting salary of one of my case managers. You know, my case managers, when I was a supervisor for CPS and worked for the state, one of my case managers, the starting salary is like $33,000 a year.
We discussed that.
Which is amazing to me. So I went to school, got a 4-year degree, was a supervisor. My highest peak utilizing my degree was $53,000 a year, and working 80 hours a week.
And you have probably one of the most important jobs next to, honestly, teachers.
Yeah,
You do.
yeah.
Because your job is, well, your previous job was to make sure that children were safe in an environment where they got the opportunity to go to school. They got the opportunity to have a good family life. And it's mind-blowing that, not to demise what real estate agents make, because you guys do work hard. You work for free, basically, until you make a deal. You guys work free every day. So it depends on how hard you guys work. But teachers and social workers, you guys have no option but to work hard, because you're saving children's lives. You're creating our future economy. You're creating our future presidents, which is kind of scary.
Well, talking about making, we could make about a future president if you want, actually.
Gosh.
Just kidding. But no, I mean, but to your point, you can make more in sales than you can with a formal education at times, and that's like kind of the Robert Kiyosaki kind of ideology of like Rich Dad Poor Dad.
Yeah.
How did we get off on this tangent?
Well, because
we're talking about houses.
Sending your children to college in a recession is a bad move, but are we really in a recession? Who knows? You know, so the media is mixed. I mean, you can look at some of the stats and stuff, but the media is mixed. You know, as far if you're following Jerome Powell, everything's fine. Our economy's booming. Whatever. We're not in an inflationary period. You know, the prices are just going up a little bit. You know, if you're an economist, if you actually watch, you know, Mario watches our show on Friday. That's hey Mario. But you know, we talk about finances, we talk about the economy and stuff, and it depends on what perspective you want to take. And going back to, you know, what our discussion was prior to the show, you know, utilizing your home and pulling out money is an option. You know, I think a lot of people want to, you know, capitalize and pull out on their investment. You know, is it advisable to do it early before retirement? Who knows? This market environment allows for people to do that. So there's HELOCs or home equity lines of credit. I don't necessarily recommend those because those are different a little bit. I've been in both. I've done cash out refis. I've done HELOCs against my property. Use that money to get into some of this stuff. I for my other company, which is CO Network. A couple of years ago, we got into a magazine and started that little venture. So I pulled money out of my home and used that. Wasn't the most successful thing or the smartest thing to do at the time, but I had to do it and try it out, and use that money from my cash out refi to do that. And now the equity is back in my home, and I can pull out again and get into something else. You know, use that at a very low interest rate at 3%. That's borrowing money against something that you own essentially. I don't think that, going back to the question, that we should pull money out for our children's college, because most of the time the interest rate's so low and you can literally pay it back for the rest of your life. I mean, let's be quite frank. One of the things, and this is
maybe even forgiven too.
Amen. Right now, I mean, we don't know. We don't know the trajectory of what that's going to look like. But my car payment. So I'm going to be very vulnerable and honest with you guys right now. I was in a situation where my credit was pretty gnarly, and my interest rate on my car right now, I think, is at like 18%.
That's pretty big.
So
18 is pretty high.
I know that I have a ton of equity in my property right now.
Yep.
And I could probably take out a HELOC and get an interest rate of 5%. That's almost like it's like a 12%. I mean, depends.
Well, not that I'm a financial planner or financial advisor, but I would also recommend a cash out refi. So you're refining.
It would give me an opportunity to pay my car off a lot quicker at a lower interest rate. So I can make the same $500 car payment every month at a 5% interest rate in my HELOC versus I think it's like 19 It's really high.
Can I slap your hand right now?
It's
19K.
really high. It's really high. Like it it sucks. It sucks.
I was trying
But,
to slap. She's only 5 feet away from me.
It's or like buying the children vehicles.
Yeah.
We're buying vehicles for children, and car dealerships are having these great deals, and yeah, you might get like 5% for 60 months, which is the average. 5.25 or 5.27% is the average right now that you can get on an interest for a vehicle.
Yep.
Or you can go in and do a cash out refi and mentally know that, hey, I'm going to get this at 3.75%, and I'm still going to pay what it would be as if it was at 5.27%. So it's really, again, we're going back to consider your overall goals, what other opportunities you have.
Yeah.
You can sell your property if you're at that space where you really don't need that large property. You have a ton of equity in your property. You could use that to turn around and buy another investment, maybe in another area, because Arizona is, we're on a whole different level than a lot of other states. So maybe you want to buy.
Yeah, I'd agree with that.
Go back. I love Montana. I want to buy a ranch.
She's still talking about Montana.
I know. I know. Kevin Costner's like my favorite universe.
Kevin Costner.
I know, he's amazing. Kevin Costner, I love you. Okay.
That guy's old.
Or you can just hold on to it and sit and wait, which is fine too. You just have to make that decision. What works for you and your family?
Yeah.
And today might be different than tomorrow, and then the next day and the next day. But making that decision, but definitely reaching out to a real estate agent like Robert to find out how much equity do you have in your property? What are your options? Do you want to downsize? Or maybe, just maybe, you have a lot of equity in your property and you plan on building your family and having a couple bambinos, and you want to buy a bigger property so you have a nursery and a playroom.
Yeah.
So then you can take the current equity you have and use that money to buy a bigger property to expand your family. Or maybe you guys want to buy something further out, or there's so many options. It's making sure you consult with yourself, your spouse if you have one, or your partner, your real estate agent, your financial advisor.
Hello.
Hello. But don't let anybody sway you. Make sure you're making that decision, because so many people can be swayed by that shiny object of dollar bills.
Yeah, and this would be the time. I had a discussion with my brother too, because we talk about finances. He's on the show on Fridays. In there. I'm not in there.
It's one of those things is like, how long should you actually hold on to your property? So
interest rates are around 3.25% right now. I mean, just looking at, this is Bankrate.com.
that's variable, of course, because depending on your credit,
depending on
and
who you're, so
equity and all those different things.
Let's give yourself a better credit score. Let's give you
the average American is between 580 and 650, 680.
Yeah, imagine leveraging off your asset at 2.75%. I mean, if your car loan is at 18% and you take a cash out refi, purchase your car, not only do you have your car paid off, they can't repo that if you don't make a payment, but you've also reduced your interest liability.
Well, and so I'm gonna go back. I'm just gonna brief synopsis. I didn't get my first credit card till I was 36. It took me a long time to build my credit because I had a lot of medical debt, and then I built it so I could buy the house, and I had a vehicle that had a good interest rate, but I totaled it, and then I got a new car, and then my sister 2 weeks later, sorry sis, it was not her fault, she totaled that. So now I had 2 vehicles under my name that I was technically liable for, but we were waiting for the insurance companies to pay it all off. So that's how I ended up with a really high interest rate. So
the other advisable thing is not to co-sign on a car.
Oh, no, I didn't co-sign. These are both my vehicles. Oh. And yes, that is very true. Do not ever co-sign. And don't co-sign on a car or buy a car or
with
do
friends.
Anything silly while you're buying a house. That's just a side note.
Or I co-signed on my friend's engagement ring one time when I was like 19 years old. Stupid as this. I was 19. Okay, I was 19.
Yeah, that was not right.
And I screwed up. So I had to pay that off in order to qualify for the house.
But buying a house will bring up your credit score. So
Mario says, let's go to Puerto Vallarta.
Costa Rica. You can. So
retirees
72,000 Americans own properties in Costa Rica.
Is that where we're buying?
72,000.
How much money do you got?
Well, it depends on if I sell my house. Or
We do a timeshare. We can do a timeshare.
Timeshare. But no, Costa Rica is a great place to buy a property. And the properties right now, you can buy a beautiful place for like $35,000 on the beach. And it's very Americanized. And I think it's only like a 4-hour plane ride, per se. That's not where we're going with this. And where
See, all tongue
what we
tied.
were talking about was if you have a high interest rate on your vehicle and you were able to get your credit score up to buy a property,
Yep.
that does give you an opportunity with interest rates being low to turn around and take out some equity in your property to pay off your vehicle, not because it's going to get repossessed, because it's just a great financial decision. And so continuing to pay the same dollar amount per month, and you'll be able to get your vehicle paid off probably with 2.5 years less, depending on where you are in it all. That's just a little piece of personal finance. Not that I'm a financial advisor. This is based upon experience. And that's my story. I'm sticking to it. So sell, buy, or...
It seems like more of a venting session. We should be doing a counseling show. We should be talking to each other about how the support network. We can do a support.
Like buyer, seller,
be Mario support.
They all need to be counseled to be able to make the right decision. That's what I was saying. Talk to their family, their friends, talk to a real estate agent.
But it's so hard when some people want to just they're emotionally like they get like this the FOMO part, but they get this like this glassy colored, pink colored, whatever the color it is. This idea that they're going to go out there and be like these millionaires and go buy a house today and it's going to turn over. I mean, people are just so emotional. How do you? I mean, that's a challenge in itself to get through that. You know, and when somebody wants something, they're going to find the person that gives them the answer they want. And
100%.
that's tough as a friend. It's tough as an agent too, because there'll be so many people out there like, I just want a house and that's all I see. You know, are they going to pay 50, 60,000 over? And you're like, you shouldn't, but I will help you if that's your decision. And sometimes they don't want to hear that. They don't want to hear the negativity. They just want to see or feel really that whatever decision they're going to make is going to give them comfort. You know, they're looking for somebody to give them comfort.
Well, and that's why you're validating what I said earlier is to find, 3 different people from 3 different perspectives, and also write down what we talked about, like, a clear strategic plan. Consider your overall goals.
Yeah.
What are your opportunities? What are your tax benefits? What's your cash flow? What does that look like? And don't just ask the one person that's going to give you the answer you want, because that's what we all do. Should I do this? One person says, no. And they say yes. You're like, yes, I love you. No.
I know we're like a bunch of kids asking for chocolate. We're gonna go to the person that says yes, and it's usually grandma,
Yeah.
or grandpa, whatever. You were probably grandpa. I was grandma. Although my grandma was really stingy about everything. So.
Oh, not mine. Well, my grandparents raised me. We talked about that. So
I know.
But no, they did not spoil me. They taught me some very well-rounded things. Cash is king. Cash is your number one. So your cash flow. How are you going to create cash flow?
Well, we can ask our guests, so or our commenters. So if you have any comments or questions, we're nearing the end of our show. Mm-hmm. You know that we're at 28 minutes already. It just goes by that quickly.
Oh my gosh, it does.
Yeah. So we're at the 28-minute mark. So if you are on Facebook, YouTube. He loves to give hearts. Look at that, Ashley. Hearts. Can we have some hearts? There we go.
Yeah.
If you can give. It's tough to, as a buyer, to make that decision one and then go out there and face this market. It's tough as a seller. Well, in one respect, it's tough as a seller because you have no place to go once you sell, or that uncertainty if you do sell, where are you going to go at that point? You know, but the money's nice. The money's nice. I do have one family that I'm helping right now. They decided to rent for a year to kind of see where the market's at a year from now. I had one family that got a little hesitant and pulled out. You know, so it really depends on your comfort level and where you're at. But is there anything else that we need to share today Miss Miller. And the hordes of people are waiting for your words right now.
I reiterate myself a lot, and I say it just this market is so intriguing and interesting, and we don't know the trajectory of it. So put some goals down on paper, like we talked about 2 weeks ago. What are your goals? Where are you at financially, and where do you want to be? And I know setting goals can be challenging to some people, but that's the only way you're going to be able to make an educated decision, is to put it on paper, see it, feel it. It's tangible. You can read it over and over again.
So setting some goals and getting ready, and it's the end of the Monday. We got to get ready for Tuesday, because Tuesday's coming up pretty quickly. Ashley's got lots of things to do. I have lots of things to do. There's a whole pile underneath my thing here. But Robin Morales, RCO Network, HomeSmart, Ashley Miller from Great American Title. Give us some love, give us some comments, and we'll get back to you guys sometime next week, I think. Hi, Miss Miller. You gonna be here?
Oh yeah.
She'll be smiling and excited. So we'll see you guys.
See you.
If I can get this done right there, go.